Janet Yellen came out yesterday, said, doesn't look like we're going to see any high interest rates for a while. Everybody's happy. Europe's happy. Asia's happy. The United States is happy in the markets, that is. And we see the markets rise because Janet Yellen says we are maintaining cheap money policies. It's very, very interesting, though, what she said. She also said that we are not in an environment from a jobs and employment and economic standpoint that we can raise interest rates on our monetary policy. In other words, the cheap money is a stimulative for job growth, as she said, for job growth. So, obviously she believes that. I understand that. But if she is right, if she's right, why are we where we are after 6 years of irrational, pathetic, cheap money? Why are we here? Is the cheap money now, instead of an immediate stimulus to the economy and job market, is it now a 10 or 15 year program before we see it taking effect? Is that what it is? One would sure think so. So it's one thing to say that, Janet Yellen's saying that. It's another thing to believe it, because again, if that is true, we should have full employment, a robust GDP growth, a robust economy, the fundamentals of the economy stronger than maybe they've ever been, with all of that cheap money stimulating job growth and the economy. And I suppose that Janet Yellen is going to be committed to sticking to the same policies. It's okay if she wants to stick to them, but can you come up with another reason why you feel like you need to stick to them? Because it's very disturbing when you're doing something for job growth, and we haven't seen any. 6.7% unemployment, if it goes down to 6.6% on Friday, is not a thriving economy when you look at all the numbers. And I know she has looked at all the numbers because she has said she has looked at all the numbers. She claims that she has been thriving. She has been focused more on the U6 number, the underemployment rate, more than Ben Bernanke ever has. She has talked about it. She understands the underemployment. She understands all of the part-time jobs that are not full-time jobs that yet are being used in the employment number. She understands the disappearance of those people eligible to work. She understands the statistical disappearance of all of those people. She understands that the numbers that we see are not reality. So, one would believe that the headline 6.7% unemployment number is not real. And if you believe that, then one would have to believe that the cheap money has done zippo, nothing, except allow companies to manipulate their balance sheets, allow companies to thrive, stocks to go higher, but has done nothing for the family, has done nothing for the economy, has done nothing for food prices, has done nothing for gasoline prices, has done nothing for the average person when it comes to discretionary income. And then we get a report out today, as if we need a report, but the Cleveland Clinic came out yesterday and said that 75% of Americans who have signed up for Obamacare on an exchange will have higher premiums. 75% of Americans will have less dollars to spend in the economy. And is anybody calculating that into the impact it's going to have on the economy. The only thing worse than 75% of the Americans being impacted is 100% of Americans being impacted when gas prices go up and taking money out of their pocket. And nobody's even considering that. Could that be a little bit of a headwind for the broader economy? I think so, unless something has changed and we are no longer consumer-driven economy.